Welcome to the deep dive. Today, our mission is pretty laser focused. We are dissecting the payout rules for the Lucid Trading prop firm, and we're using that recent Rapid Guides review as our blueprint.
Right.
The big hook, the thing that gets everyone's attention, is that funded traders can keep 90% of their profits.
Yeah, that 90% is a powerful number. It's one of the best in the industry, but it really does come with some serious strings attached.
Specifically, consistency rules.
Exactly. It's fascinating, really. The firm is actively engineering its rules to weed out traders who just get lucky on one massive trade. They're looking for discipline, for steady growth, and the payout rules are how they enforce it. That's the real tension here.
Okay, let's drill down on that structure then. The basic logistics seem friendly enough. Minimum payout is $500, and you can request it any day once you qualify.
And it's usually processed in about 2 business days. Pretty standard stuff. But the real game changer, the thing that steers your behavior, is that consistency rule. Absolutely. I mean, this rule is specifically designed to stop one huge profit day from making up your entire performance. For the Lucid Pro accounts, those are the ones with the standard evaluation. Your biggest single day of profit can't be more than 35% of your total profits for that cycle.
And for the Lucid Direct accounts, it's even tighter, isn't it?
No, much tighter. With direct accounts, you get instant funding or a shorter evaluation, so the firm's taking on more risk up front. To balance that, they dropped the consistency limit way down to 20%.
20%. That really forces you to spread out your wins.
It does. But, and this is important, that counter resets after every payout. So you aren't penalized forever for having one great day early on.
But you still have to show you're actively trading.
Yes, you have to clock in at least 5 profitable trading days in a cycle to even be eligible for withdrawal.
And those daily profit targets, they scale with the account size, right?
They do, and they're pretty reasonable. For a $50,000 account, a profitable day just needs to be $200 in the green. It's $250 for a $100,000 account and $300 for a $150,000 account. The bar is low enough to be achievable, but high enough that you have to show up.
Okay, let's talk about the buffer balance. This is maybe the most unique part of their system. It's your max loss limit plus an extra $100. What does that mean in practice?
Think of it as a safety net, but for the firm. You can only withdraw profits that are above that buffer level. So if your profits are still inside that zone, close to your max loss limit, you can't touch them.
So it can sometimes delay a payout, even if you've hit your target.
It can, and the feedback suggests that happens, but it's there to protect their capital and make sure you have a real cushion.
There are also caps on early payouts, I saw. You can't just make $5,000 and pull it all out immediately.
That's right. For a $50,000 account, for example, your first few payouts are capped at $1,500. But once you've proven you're reliable over a few cycles, they lift those caps. It's another reward for consistency.
And they have a couple of other safety nets. The live accounts, for instance, still get that 90% split and can get daily payouts from day one. But what about this second chance system, the Lucid escrow accounts?
That is a really powerful feature. If you lose an account but you've already had successful payouts, they hold those past profits in an escrow account for you.
So you can use your own past earnings to try again.
Exactly. You can use that escrow money to pay for a new evaluation. It's a financial cushion that rewards traders who have a proven long-term profitable edge.
So if we pull all this together, the sources really paint a picture of Lucid Trading as being very competitive, but for a specific type of trader.
Yes. The feedback is that payouts are incredibly fast, often same day, and the firm is transparent. But it all hinges on discipline. The system forces you to trade for small, sustainable gains.
Which brings us to a final thought for you to take away.
Right. Since your success is defined by these strict consistency limits, that 20% or 35% cap, what kind of weird psychological changes might you need to make to your strategy? Are you still trading just for profit, or are you now trading to meet the firm's specific metric just to get that payout reset? It's something to really mull over.